Good afternoon and welcome back to this afternoon session of the Joint Mutual Forum. Before I introduce this next panel, I want to give you a few reminders. If you'd like to activate the closed caption function, please click on the three dots on the lower right-hand corner of your screen and then click on the button that says Multimedia Viewer. Please use the Q&A box to submit questions to the panelists throughout this session, who will try to get to as many of the audience questions as possible. When you submit those questions, please remember to select all panelists so that we're able to process the questions effectively. So for this panel, what we've recognized is that consumers are increasingly preferring to do business with banks that support community and social programs and reach underserved communities. The next panel of bankers will share how they promote their bank's mutuality to attract customers who appreciate and are committed to the bank's community focus. The panel will also discuss attracting a diverse and inclusive board of directors. Michelle Cahill, Senior Deputy Director of Compliance and CRA Examinations in the FDIC's Division of Depositor and Consumer Protection, will introduce the bankers and moderate the panel. Michelle, I'll turn it over to you.
Great. Thank you, Mike, for that introduction. Good afternoon. Welcome back from lunch. Hope you all had an opportunity to grab something. I just want to say what a great program so far. Hopefully all of you are getting a lot of takeaways from today, and we look forward to continuing the great program this afternoon. I feel very fortunate to be facilitating this afternoon's panel. So without further ado, I would like to welcome our members, our esteemed panel members, to our virtual stage. I had the opportunity to talk with each of them about a week and a half ago, and it was great getting to know them. I know that they are going to be very engaged today and will provide some really good ideas for all of you, I think, to take away based on their experiences. So without further ado, let me introduce, we have John Coyne, who's Chairman, President, and CEO of Bighorn Federal Savings Bank in Graybull, Wyoming. So welcome, John. We also have Brian North, President and CEO of 5th District Savings Bank in New Orleans. Did I say that right? I didn't know if I should say New Orleans, New Orleans. I'm working on it. That's fine. You can correct me later. Okay. We also have Bill Senolds, CEO from Forward Bank in Marshfield, Wisconsin. And Lisa Venati from Torrington Savings Bank in Torrington, Connecticut. Again, welcome to all of you. Well, to say, after reading all of their bios, I can't say enough how impressed I am by all of you. Not only by your depth of experience at your institutions and the industry associations that you've been members of, but also by your commitment to community service. Lisa, for example, commits time to her local library and a community health and wellness center, among other outreach activities. Bill chairs a local economic development board while also serving on the board of a local health system. Brian focuses his outreach in education and healthcare, and while John is both a volunteer firefighter, kudos to you, and trustee for a local rehab center. And those are just a few of the examples of their dedication over the years. So I'd like to just take a moment to thank each of you for your commitment in your communities, which also segues very nicely with the theme of this panel and brings us to our first question. So question number one. I'd like to begin by discussing community-focused mission. And I'd like to turn to you, John, first to get our conversation started. Leading up to today, you talked about the benefits of mutual versus stock ownership and your bank's consistent approach to giving back to the community. In what ways do you leverage your mutuality and community-focused mission to attract consumers who not only appreciate your mission, but actively seek businesses that are community-focused? Turning it over to you, John.
Appreciate those wonderful comments, and it's certainly great to walk with a bunch of giants in regards to the panelists that are with me today. So, just for background, Bighorn Federal is about a $325 million institution serving about 6 counties in north central Wyoming. We have markets that are as small as about 1,600 people up to about 8,000 people. And through that, our mission statement is really simple. It's make our communities better. And so when we think about that, I want to share just a couple of different stories about how we go about doing that and how we engage with the customers. A few years ago, we kind of partnered with a group called FTF, which is Funding the Future. And what that is it's a nonprofit that goes out and brings in a rock and roll band into our communities that we leverage with the schools to create engagement and start the budgeting process, start the social awareness and the money concept at a very young level with our kids in school, and trying to start that process at that stage and move it forward. And through those kinds of relationships, we are submitting ourselves into the communities that we try to serve, creating not only financial education, but also outlets for that redistribution of capital that is so important for these small communities to survive. We take that a step further and come to a more pressing trend, which is some of the financial fraud that's going along, and seeing that happen in our communities and how that's impacting some of the very hardest working people that are embedded. And what we decided to do was we created a partnership with the other financial institutions in town, local law enforcement and the sheriff's department, and started to write articles for our local paper to create engagement at that level, to try to educate, find those financial red flags, and try to avoid this fraudulent behavior from taking monies out of the communities that we serve and making sure that it's a safe and sound and prosperous place. At the end of the day, our whole focus is engagement with our communities, with that very simple mission of just making our communities better.
Great. Thank you, John, for getting this conversation started. It's so important to get the young people involved, right? Just as you said, to start that foundation as early as possible. We're also seeing some trends resulting from mergers of larger or national banks. Lisa, what opportunities are you seeing from these trends in smaller communities especially?
Well, thank you, Michelle. And I too want to thank you for the kind words earlier, and I'm happy to be here. So we're in Connecticut. We're about a $950 million bank. And Connecticut's a state that's really well served by mutuals. So we have a community that really appreciates the value of a local hometown bank. However, in the last 3 to 5 years, we have seen the large regionals and nationals pulling out of the market, really focusing more on their urban locations. So our community is really starting to recognize that while digital conveniences are great with the larger banks, they may not be there on the street corner the next time they want to visit their local branch. Every time this happens, it's an opportunity for us to tell our story to the community in a meaningful way. Mutuals are uniquely positioned to provide financial support to their communities. We've all heard, and probably everyone on the call today has said, we don't have shareholders to please. So that allows us to reinvest our profits into local organizations, and not just through contributions and sponsorships, but through local credit decisions. I recently heard a fellow mutual bank CEO explain the concept of patient capital. And I think that really resonated with me, because without the pressures of profit expectations, we can take our time and focus on things that really matter. Something as simple as our name and logo on a outfield fence at a baseball game really resonates with parents who appreciate the role we play in keeping registration costs down when we financially support, the various leagues. One of the other things we've done recently, and it seems simple, but it's been very effective, is this year we formed a couple of street teams that quite simply put boots on the ground in our community. They set up tables at local street markets or festivals, and they're able to deliver our message to people in an informal and fun setting. Just seeing our table there often will spark a conversation with a passerby. A non-customer may have a question or a need, and they're not going to walk into a branch to ask it. But the teams can get the dialogue started, make an introduction, and invite the person to stop into a branch for a more formal conversation. I say this all the time: people bank with people, and advertising is great, and there's a place for it, but we really find value in introducing our services to the community in person.
Awesome. Thank you, Lisa. Those are great ideas. The boots on the ground. Sounds like that's going to maybe be a theme here as we go along. Bill, I'm going to turn to you. The name of your bank says a lot about your mission. Can you share a little bit more about that? And I think you're on mute, Bill.
All right, and our mission is moving our communities forward. So our depositor controllers, basically, we treat as owners, and we try to make sure that they get the best possible services in our community. After we set that in place and we moved our deposit rates to the point where our depositor owners get the best deal, we started focusing on the nonprofits in our communities. We came up with a product, a charitable money market account, where when a customer opens an account in our bank, we will pay 10 or 25 basis points to the nonprofit of their choice. And over the last 10 years, we've given back over $1 million into our communities. This year, it'll be about $250,000. It has become a significant funding source for our organization. And as we've gone along, we expected somewhere along the way that other entities would copy us. But what we found out is shareholder-owned institutions have to make the decision between giving back to the nonprofits or giving to their shareholders, and they always choose their shareholders. So in the end, it has become a significant competitive advantage for us. And our logo you see everywhere in the community that we're in, the communities. We are in 10 locations. We're a bank of about 800 million right now. All of our locations are in communities of less than 20,000. And we're widely known as the bank that gives back. When I meet somebody who doesn't bank with us yet, and they find out where I work, that's the first thing they say. You're the bank that gives back. You're the bank that makes our communities great. The effect has been pretty impressive. We also look at very heavily into what the important things in the rural communities are. We know that every community needs a progressive school system, a grocery store, and most importantly, a bank that'll step up and make loans. The school system is the basis for the community, and we support it very heavily. We do things like half-court shots, field goal kicks, things like that. Well, what happens is we do those items, other communities see us, and I have a steady stream of communities that come and ask us to be part of their community and open a location in their towns. The school system support has been very, very good for the bank along the way. Example, recently we had a small community come to us. The high school wanted to put in CNC machines into the school to teach the kids the skill. We provided funding for that, and in turn they named the industrial arts area the Forward Center. So everywhere we go, we get our employees involved. All employees are expected to volunteer and become part of the community and become leaders in the communities that we're in. And it's been extremely effective against the stockholder or shareholder-owned banks.
Great, thank you, Bill. Definitely sounds like you are paying it forward.
Mm-hmm.
So if you use that, I'm gonna have to copyright that. I'm sure you already have. So, and Brian, unlike Bill, your bank operates in a more metropolitan setting. So how do you distinguish yourself amongst your competition?
Well, we are operating in a relatively large metropolitan area down here in New Orleans, and it is a little bit more difficult to differentiate ourselves. There's a lot of banks in our community, so but as the words have been used many times so far today, community engagement. We are able as a mutual to have a high level of community engagement. We expect it of our employees, and we do that in many different ways. One of the ways that we've found to be successful is in going into schools. We created some programs to go into schools. Frankly, we started with secondary schools. And at the high school level, we weren't very successful. We could not figure out how to crack the code with those high school students. So we went back to the drawing board, created a program to go into elementary and grammar schools, and really engage the kids in an interactive and a fun way to teach them about banking, give them some things that at their level that they found to be fun, coloring books and piggy banks and things like that. And what we found happened we'd encourage the kids to fill up their piggy banks and come back to our bank. And what happened was their parents came in, and we got some FaceTime with their parents, and many of whom had bank accounts either with us or any other bank, gave us the opportunity to teach them about the benefits of getting engaged in the banking system. And we're, not specifically speaking about Mutuality, but what we could do to differentiate ourselves from the larger banks that operate in our community. So that's been a little bit of a difference maker. And what we found is you engage a large group of people, even though they're little kids, but they have parents and grandparents. And so a lot of them have become customers of the bank. Another thing that we did a few years ago, we had the opportunity to work with a large community college here that serves the New Orleans area. And we engaged with them to actually create a banking curriculum that they could offer to their students through their business program. So our bankers actually created the curriculum, teach the classes. So again, get an opportunity to actively participate and engage with members of the community, being students and in some cases the other administrators of the school, and be able to teach them about the uniqueness of what we do and encourage them to become customers of the bank. And that's actually paid some real big dividends. There's actually some students now who I think intimidated by the banking system in general, who just didn't think that they were worthy of being customers of a bank, that when you break down those barriers, good things happen. And so we've seen some success in going into the classroom and trying to engage students who ultimately will get jobs and have money and be able to borrow money and do all the things that we do as bankers. So that's what we've had some success.
Great. Thank you for that, Brian. And, not only did you touch upon some of the ways that you distinguish yourself, but really started talking about the unbanked, the underbanked, and what those barriers are. And so it was a great segue into our next question. And, both Chairman McWilliams and Acting Comptroller Sue talked about financial inclusion this morning, underscoring that it continues to be an industry challenge. Historically, you all as mutuals have been very active in community outreach and involvement, which we have just seen. Brian, you touched on some ways that you're proactively and creatively approaching financial inclusion and collaborating in the community to get people involved that may not previously have had a banking account. So I wanted to turn to the rest of the panel members and see if you can share with us some of the ways that you're approaching financial inclusion. And I'll start with you, Bill.
So most recently, during the pandemic, the Federal Home Loan Bank gave a grant. We in turn channeled that along with some matching funds of our own to Hispanic female-owned business that is in one of our smaller markets where we have a high Hispanic population. We have they struggle with translation and financial education. So we in turn provided them with funds to set up a center to actually improve English language as well as understanding how the banking system works. We put our people into it to help her do that. And it's been fairly successful so far, and we hope to do a lot more in the upcoming months as things open up a little bit more here. In addition, we've also come up with new checking accounts specifically designed for people who traditionally weren't eligible to get our normal product. That too also seems to be taking off quite nicely. So we put a lot of effort into working in this space, and so far so good.
Awesome, thank you, Bill. How about you, Lisa? Can you share some ways that maybe your bank has focused on outreach?
Sure. So as far as specific products, we have a first-time home buyer loan program that allows borrowers to purchase their first home with only 10% down with no PMI. That's been wildly successful in helping young families purchase a home, put down roots in our community. As we all know, young families really are the provide the stability for our school systems and our grocery stores and our restaurants and the like. We're also working right now, our retail and marketing team are working on a checking product that will be part of the Bank On program, which is specifically focusing on the underbanked community, along with some other things. I will tell you, we have a group of our staff going through a leadership training program, and part of their capstone project this year is going to be creating, doing an evaluation of our products and services, and then making recommendations to our product team for, closing some of our gaps, but specifically focusing on products that help with, building your financial portfolio, if you will, but also serving some of the members of our community that maybe we haven't been able to reach. One of the things that we did this year, the bank formed, well, not this year, we formed a charitable foundation in 2018. It was in honor of our 150th anniversary. The foundation's mission is specifically focused on supporting homeownership, financial literacy, and programs that supplement K through 12 education. And this year we had a particular focus on organizations that are trying to establish affordable housing in some of our surrounding towns. So what this has done is it's given us the opportunity to create partnerships with organizations. And, so when they're working on programs that maybe for some of their constituents that are struggling with reaching into the banking system, they've got a partnership with us. And we've had a number of occasions where they've reached out to us and said, hey, how can you help us help our clients? So that's been really, really valuable for us.
Great, thank you, Lisa. And you mentioned Bank On, and Chairman McWilliams talked about that in her opening remarks, and there was a little, we wanted to make sure we got the numbers right, and I did confirm that it is around 100 banks. So just wanted to confirm that, and thank you for your bank's participation in that. And John, want to turn it over to you to give you some time to talk about what your bank is doing as well.
Yeah, you bet. One of the things that we've talked about for a long time is how do we make sure that everybody has a chance at access for loans and deposits? And one of the things that we came up with through that process was not credit scoring. Not taking a FICO score and delivering a rate and a term associated with that FICO score, but taking the time and effort with people to understand their credit, even if their FICO score wasn't what we would normally deem in the industry as sufficient, and seeing if there were situations where, medical and, historical events told a story that would allow us to find or extend credit to these people. And then on top of those kinds of programs, we layered that with a situation where our pricing was kind of universal. You either qualify or you don't qualify. And if you do qualify, you're going to get the same rates and terms as anybody else would in our organization. And that really leveled the playing field for us and brought a lot of people who would normally be concerned about whether or not that was ubiquitous through the process, to feel comfortable with the fact that, if credit was available to them, that they could obtain it at the best opportunity possible through a Bighorn Federal. And then as we look towards our population base, one of the things that happens is we do have a highly migrant workforce that comes in and through the summer months and helps us tend with the ranches and the fields and does those kinds of labor positions for us. And our ability to communicate with those and serve those people while they're stationed here became really important for us to kind of complete the circle, not only for our customers that are here every day, but also that population that was a little bit more transient given the workflow. And so we made a conscious effort to hire people who had the ability to be bilingual and to communicate effectively with those people and welcome them into our institution. And through that, what we saw was a strong commitment to our institution. And so, I know we talk a lot about how do we become inclusive and how do we do those things right? But a lot of times, if you just take those general human qualities and apply them to your everyday business, you don't need, in my opinion, fancy policies to get that stuff done. You just need to understand how it serves. And again, everything we do kind of rolls back to that really core mission statement for us is how do we make our communities better? And if you take those kinds of applications on how we bring inclusiveness into our organization, I think those are all, just really fundamental things for, our level of success through that process. I know I touched on it earlier, but, one of the other things that we do very extensively is we try to create touch points with our children through all levels of school, whether it's at the elementary, at the middle school level, or the high school level. One, to dispel the theory that banks are, uncomfortable places to visit, and, that education curve may not be the same for everybody, and so I don't want to be intimidated. We really work hard to break our bankers down into just being people so that all of those kids, feel comfortable talking to us when they come through the process. But the other part is to teach them along the way, whether it's through financial support or even boots on the ground situations, how to start to budget, how to use the rails that are in existence of the financial industry themselves, and then how to be successful with those skill sets once they're earned. And so those are certainly all ways that we try to create for an inclusive population and making sure that everybody is served appropriately in our communities.
Great, thank you, John. No, thanks to all of you. I mean, I think you've touched on a lot of important topics, and not just the inclusion itself, but it's really the commitment, right, and finding those ways within your distinct communities of where you can reach those unbanked and underbanked populations. And I think I think almost all of you touched on starting them young, right, and getting that comfort level, as you said, John, for people to be comfortable going into the banks and opening accounts. So thanks for that awesome discussion. I would like to shift a little bit now. There was a lot of discussion this morning with Chairman McWilliams and Acting Comptroller Sue about technology and innovation. You've shared a few strategies that, you talk about different ways that you might use technology. And I think it's safe to say that technology is here. It's not going away. It's constantly evolving, particularly, in the banking industry. So, John, I'm going to start with you. In our pre-panel meeting, you talked about a bit of a culture clash between trying to create efficiencies through technology, but still maintaining those personal interactions with your customers. And so can you share a little bit more about that?
Yeah, you bet. So, the technology curve is always going to be important in everything we do. And at Bighorn Federal, we actually, believe it or not, got named a top 10 small community bank a number of years ago for some of the technology initiatives that we were putting into play. I think technology is something that we always have to be cognizant about. It will, create those necessary efficiencies. Even in today's world, the phone has become an active place to do business on. And so, if you don't do any of those things, you're probably missing the mark. On the flip side, I come from a very rural set, and our people want some level of technology, but also still want that high touch, high personal evolution in being able to make their banking relationship matter, right? They want to be somebody in that banking relationship. And so as we kind of walk forward, we always take on this attitude that technology is almost a necessary component of what we do. But as long as we are continuing with our mission, and obviously this will evolve over time, we want people on the ground. We want to be in a position where if I can replace an individual with technology or have an individual on the spot, we want the individual on the spot. That serves our community better. Through that process, we're serving the needs of the community in that regards. And so we will continue to, always test and evolve this. But I look at the mutuality concept as a balancing act of multiple components. And, all of us have earnings at play. We've all heard about the fact that, we have patient capital. We have the ability to look long term. We have the ability to manage, those processes. But, I've always said in our institution, what our job is sometimes it's to satisfy safety incentives. Sometimes it's to satisfy technology. Sometimes it's even to satisfy our own internal needs for doing business the right way. That typically leads to our employees, but ultimately all of those things should serve our customer. That's probably the best aspects of a mutual institution is we don't get conflicted by short-term pressures in any of those components. It's our job to strategize them. It's our job to prioritize them. But ultimately, if we serve those all correctly, we will find a good place and an adequate return to serve all of those things. So technology, at least for our institution, is a subset of what we do. We want to still lean on our people to have that personal relationship that we're trying to strive for.
Great. Thank you, John. Bill, I'm going to turn it over to you. I know when we had our pre-panel meeting, you may be taking a slightly different approach when it comes to integrating technology. So can you talk to us about that?
Yeah, we're probably as close as you can get to cutting edge. We try to use technology wherever we can to augment delivery of product to the customer, but we're also looking at things along the way behind the scenes. For example, we're looking at artificial intelligence to help us in the interview process and when we're processing applications to improve our throughput in that area. But we understand that technology is very expensive, and part of the reason why we've grown so rapidly is to support the level of technology that we currently have. So when you walk into our bank, for example, we have something called Virtual Sandy. We used to have a receptionist called Sandy, and we came up with a machine literally to replace her. You can walk up into the lobby, touch the screen, find the group, and it'll dial directly up to the phone of the individual with video, so that they know they're there, and you can go and meet your customers. We use smart deposit ATMs for a long time. Right now, we're in the process of installing ITMs. We have 2 new builds going on right now. One of the new builds won't have a teller line. It will only have ITMs outside, so that the customers who are just doing transactions don't have to get out of the car to come inside. So really what we're trying to do, though, is to remake our expenses so that the expenses that we do have are going towards productive conversational things with our customers. So instead of just having cashing a check at the counter, we can have a machine do that. We're investing the money into the people who will have in-depth conversations and really truly help our customers. We also use technology for helping us approve loans. We have Consumer Bot, which has been extremely successful. Our consumer loan portfolio is up over 200% in 3 years, with a very high level of quality. We still haven't had a repossession in the last 12 years. So, as much as many car loans as we make, things are actually working along pretty well. So that's about it.
Great, thank you, Bill. Thank you, Bill. So Lisa and Brian, I think both of you are a little bit in the middle, right, of what John and Bill talked about. So Brian, I'll turn it over to you first to provide some comments.
Yeah, we kind of, I guess you'd say we are kind of in the middle of that. We've been, we're in our 95th year of operation, and, in order to do that, I think we've always had to be, to define, how do you define success? Well, in our case, we want to remain relevant. So as an organization, to remain relevant to our customers and to try to attract new customers, I think you have to find a way to meet them where they are and to serve them the way that they want to be served. And in our case, we feel like that involves having technology and well, it's not necessarily always on the cutting edge, but a high level of technology in our operation in digital delivery systems. We also still operate 7 branches. We've actually built 2 branches in the last 3 years. Now, the 2 new branches look a whole lot different than the older branches. They're a lot smaller. They do incorporate a whole lot more technology, and we found a lot of acceptance with that new method of delivering things. So we'll be moving towards changing some of our other bricks and mortar locations to incorporate the same type of technology. But we also still believe, and we still have a very engaged group of employees who work with our customers, because our customers want to come in, they want to sit with bankers, and they want to be able to engage with bankers. We saw that during the pandemic. A lot of people, they wanted to come in, and even while we had to shut down for a while, very quickly we found that people wanted to still engage with our people one-on-one. So we do have a little bit of both, and it's worked well for us. It probably is a little bit more expensive, and there may be some ways we could find some more efficiencies, and we're always looking to do that. But I think we always, again, have to meet the customer where they are and where they want to be, and always look to evolve our delivery systems so that we can remain relevant.
Great, thank you, Brian. Brian and Lisa, looking for some final comments on this question from you.
Sure. So my comments will probably sound a lot like Brian's. We too have taken the approach that we need to meet the customer where they choose to meet with us, whether it's digitally or in person. And again, same thing during the COVID response. The customers, they accepted the drive-up model of banking because they knew it was necessary, but they really missed our people. When I was named CEO a couple of years ago, I kind of had to create my vision of what I hoped to accomplish, and I had 5 sort of focus points. My first one was customer experience. My second one was digital first. So really talking about that balance between our sort of 2 demographics, right? We have a over 55, over 60 demographic, having been around for a long time. We have a lot of CD money. Those people want to come in. They want to meet with a banker. A first-time home buyer will typically want to meet with a banker. But, myself, my children, they want to do everything on the app. So we focus significant resources on ensuring our digital platforms and services have all the available options, but we still remain committed to serving those that prefer the in-person. I said earlier, people bank with people. And in a time where, we're seeing our community is seeing a number of banks closing, we've taken the opportunity to purchase a former bank branch from a larger regional bank. And we're doing similar to Brian. We are putting in, it's going to look fresh. The colors are a little bit different. Instead of a teller line, we've got pods. There's no drive-up window. Some of that was out of necessity because the existing window, it's a brick structure. Existing window was not ADA compliant. So we opted to take the window out and just have a tube system there with, so we're taking advantage of the opportunity to expand our branch footprint, but still significantly committing significant resources to both channels over the last 3 years. And I expect we'll continue to do that in the foreseeable future.
Great. Thank you, Lisa. Thanks to all of you. Obviously, technology it's expensive, it's ever changing. So I don't envy all of you trying to find that right balance for your bank and for your customers. So thank you. So I do want to shift things a little bit and talk about something a little bit different, but equally important. So we've not only heard some great strategies for how you leverage your bank's mission, right, to attract customers, and how each of you are also leveraging that technology to reach those customers, or the unbanked or the underbanked. So thank you very much for that. So now let's shift our attention to diversity. It's all around us. And I wanted to get some of your input on what are the challenges you're facing, not only in attracting a diverse and inclusive board of directors, but also meeting the needs of your diverse customers. Do you have any success stories or lessons learned that you'd like to share with the greater audience. Bill, could you get us started on this conversation?
Yes, I wish I could give you some grand story, but reality is we really are struggling in this area. First off, from a director standpoint, we're struggling getting directors, period. If you're honest, when you're recruiting directors and tell them what work is involved in the level and extent of the liability that they have and how much they're going to have to be involved, it's very difficult to get people to want to be a director to start with. So we actually maintain a pretty substantial list of potential candidates along the way. We actually pre-market to them long before we need them, and we get them to be a supporter of the bank ahead of time. And then when the time comes for us to make the ask, we have a higher success rate. But realistically, on a gender basis, we have one woman on our board, and while I think the next two will be women, because we do have the queue set up ready to go, but right now we don't need any additional directors. On a racial basis, 9 out of our 10 communities are what I would call lily white. We really don't have a lot of diversity at all. The one community that is heavily Hispanic, we have done a great deal of recruiting in that area to the small businesses, trying to get small business owners that would be good directors for our bank. And frankly, after they hear the amount of work involved, they're more interested in forwarding their business than helping us with ours. The other issue we see in our area is the predominance of gray-haired white guys that are running banks. And so what we really try to work on is moving people up into our organization that would be in a position to run a bank in the future. What we find in Wisconsin is the majority of at least the commercial banks in the area are run by ex-commercial lenders, because that's where the risk is in the institutions. And there really aren't a lot of female commercial lenders in the state of Wisconsin. We actually have gone out of our way and been very successful in that area, and I will likely lose some of the people that are working for us to go run other banks as we try to do something about moving the needle on that issue. So.
Great, thank you, Bill. And obviously highlighted a lot of challenges that I think most in the industry are facing. So, Lisa, I'll turn it over to you to share your thoughts.
Sure. So this is a challenge for us as well, and in our pre-meeting conversations, I think we all felt the same way. We've made great strides in gender diversity on our board, particularly in our management ranks. When I was promoted into the senior officer group, it was me and 4 white men, as Bill said. And very shortly after, when I was named, we added a senior vice president who's also a woman in charge of retail marketing, human resources. As I was promoted, my CFO is also a woman. So we have done a really good job at our management level with gender diversity, and really looking within our ranks, as Bill said, to promote a diverse management team, because I think when the management team is diverse, then it encourages diversity among the others. As far as our board, that's a struggle as well. We had 3 women at one point, and 1 retired. But we have our board of corporators. That is our feeder source for our board of trustees. And as we're recruiting new corporators, we're always trying to keep an eye on, would they be good trustees? What kind of unique perspective will they bring to us? Always looking at it from a diversity standpoint, but not only that, but from also diversity and expertise as well, right? Because, the more expertise business owners that you have on your board, but we struggle with that. We are relatively new to commercial lending. So we've had an opportunity recently with two very good business owners who have been great proponents of the bank from a commercial lending standpoint, and we brought them on as corporators. So always, again, looking for, diverse backgrounds, diverse industries to bring that level of expertise. But, it is a challenge, but it's one we embrace and we absolutely will continue to focus on.
Great. Thank you for those remarks, Lisa. And John, I'll turn it over to you for some comments as well.
Yeah, thank you, Michelle. On our side of the equation, much like what has been talked about before, our ability to create ultimate diversification is somewhat limited just by our natural demographics that exist in north central Wyoming. But I will say that, we were at a conference years ago and we took our entire legal directorship to this conference, and we all kind of laughed because there was a comment about being gray, frail, stale, and pale as far as the board makeups were at, and we all kind of looked at that and did the appropriate smile, but we kind of brought that home and started to talk about how do we avoid that stigma as we come forward, and so we started looking not so much at gender or racial diversification, but how do we create a great subsection within our leadership team of industry type and age, and so that we don't all age together through this process, right? We always have some natural planning that takes place and a handing of the torch from age group to age group. And one of the things that I think a lot of mutuals have that a really key advantage with versus the stock bank environment is, at least in our institution, we have a mandatory retirement age on our board of directors. And what that does is it creates a finish line. And everybody wants their job on the board to be done before they cross that finish line. And so it creates for just a natural process of hands-off to the knowledge base, handoff to the value systems that takes place. And so I guess I walk with diversity in a little bit of a different context, but I look at that as a diversity of thought, a diversity of industry type, so that our institution can be positioned correctly as we move forward, handing off those batons appropriately through that process. And so we have come through and create not only our legal board setup, but we have an advisory board, and that advisory board is our ability to train, to test, to make sure that we have diversification of thought, that we have diversification of idea that can be leveraged and cultivated at that level to ultimately, when they have the opportunity to come onto the legal board, are really comfortable in that set to express those opinions and share that diversity of thought. And I think that has in itself, transitioned us along the way. And, our history with that kind of concept in play was a very true-blooded mutual, doing secondary market loans, doing home ownership loans, doing consumer loans. And because we tackled that thought process from the board, we've kind of transitioned over the last 12 years into probably being more of a diversified lender. And in our communities, that has increased the diversification of customers, that's increased the diversification of idea, and honestly has challenged us on some of those technology and initiatives that we talked about before. And I think ultimately created us to be a better institution. And so in that regards, I'm a full supporter of diversification and diversity through that process, because it ultimately, I think, leads to better outcomes.
Great, thank you, John. No, I think that was a good kind of recap of diversity is not just one thing, and I think you all touched on different types of diversity and how you're kind of attacking that at your institution. So I thank you for that. And obviously there are maybe a lot more challenges than success stories at this point, but that is something that we're all striving for. Just one quick final question, just a time check. We've got about 8 minutes left, and I wanted to just see if one thing that we did touch on is partnering with, whether it's community organizations, other banks, and whether that's for financial inclusion or whether it's for, diversity and succession planning and trying to get more inclusive. Just wanted to throw that out, and if you've got any, real quickly, if any of you have some community partnerships that you'd like to highlight, please do so.
Yeah, this is John. Maybe I'll try to take a swing at this one before we get too far along. But, we have a number of banks that we actually kind of refer to lovingly as sister banks through our process. And some of those are out there to help us find lending outlets to things that we are not comfortable doing, either because of a level of expertise or because of concentrations or some of the, benchmark philosophies that exist in our organization. The other side of that equation is, we have taken and explored partnerships in sharing some of the audit functions and co-sharing of employees to be efficient in our model through an expense structure where we don't need those people on staff all the time, but certainly want a heightened level of expertise to come in on focus areas. And then lastly, as we try to find holes in our markets to serve, again, not having enough volume to absolutely provide for completely effective and efficient personnel, we've done partnerships such as TDOAs and first-time homebuyer programs on referral basis to some of these sister banks, where we still have the touch point with the customer. They have the expertise to take them through the various secondary marketplace, and co-opted that scenario so that we still have those touch points, even though we can get them through the system and their ultimate means. That's kind of how we've played those synergies with our sister banks. And I guess with that, unless there's another kind of specific follow-up, I'll try to hand it off to somebody else at this stage.
Yeah, no, thank you, John. That was, and actually we did get a question from the audience. It just aligns perfectly with what you were saying. And the question is, how might mutuals on a national level pool resources, ideas, etc., to promote mutuality across the country? Is there a lift to be gained? Lisa, I see you're shaking your head. Did you want to offer some comments on that?
Yeah, I'd love to. That really resonates. In Connecticut, and I hear this from some of our industry leaders throughout the country, we have a very, I'll call, unique brother and sisterhood of bank CEOs of mutuals. As I said, we have a lot of mutuals in Connecticut. We're competitors, but we're friends. And anytime, being relatively new to my role, there's been a lot of times where I've, just needed an ear or needed a resource. And just about every single CEO that I know in the state is always willing to offer support at an executive level, but also from a process level, from a policy level, if we're getting into something new and, we're a little unsure. Everybody's always very generous with their time, with their expertise, with their talents, similar to what John was saying before. And if we can't help a customer, we have a bank of sort of friends that we might be able to refer to. But I think we are stronger when we're together. And I think that's why the mutuals in Connecticut specifically, it's the only, the area I can speak to, is because we are so willing to work together. And while we compete, we still support each other and hold each other up. And I think we are stronger when we all work together to preserve the model.
Thank you, Lisa. Bill, looks like you have something to say. Go for it.
Yeah, so in Wisconsin, we have fewer mutuals and getting fewer, it seems, by the year. But we actually attempted to put together a forum where we actually held a mutual conference that we sponsored and brought in all the mutuals from the state of Wisconsin and brought in really relevant speakers for them. And while it worked pretty good, it ended with COVID, and it also is probably unlikely to spring forward in the future because, frankly, the number of mutuals is declining. We tried to reach out to mutuals in other states and struggled a little bit in getting them interested in coming to the conference. So while we have tried, and the conference that we put on was very nice and was well attended by the ones that were less than, say, 2 hours away, the rest of them didn't really seem to want to get involved.
Well, I guess that's unfortunate, but maybe you've found some new friends in the audience, perhaps. So they all have your bio now, so maybe they'll be reaching out. But yeah, I wanted to turn it over to you, Brian, too, to see if you had any comments either on this topic or any others as we wrap up this session.
Well, just echoing some of what's been said, I think we all have more in common than we have that's not in common with each other. Unfortunately, as everybody's pointing out, there's fewer and fewer mutuals out there, and I always believe there's strength in numbers. So as our numbers dwindle a little bit, I think it's important for us to continue to collaborate to the extent that we can, even in these type of events, or when we are able to get back together again and share ideas. And we have such a good story to tell, and all of the missions of the mutuals and the people that I talk to, I mean, one's better than the next, and they're all good. So we have such a great story to tell. I wish that we could get more people to find a way to charter new mutuals, but those of us that remain committed to it, I think we have a lot of challenges, but we also have a lot of reasons to be proud of what we do and be able to distinguish ourselves from some of the other banks that serve in our various communities. So some of the challenges have been talked about today, but I think also a lot of the strengths and a lot of the wonderful things that we do have been talked about. And I think we should all be proud of that and continue to go out and build upon those things and collaborate where we can.
Well, awesome. I don't know that there's a better way to wrap up this panel except with that last question and those last thoughts from you, Brian. So I want to thank all of you so much, Brian and Bill and Lisa and John. You guys were great. So willing to be really engaged in this panel. You shared some awesome ideas of what you're doing at your banks and how you'd like to partner with your fellow mutuals if the opportunity does arise. And so without further ado, I will turn it back over to Mike to facilitate to our next session. But again, thank you so much.
Thank you, Michelle, for being a very effective moderator for that panel, and a very special thank you to Lisa, Bill, John, and Brian. I really appreciate the candor with which you approached your participation in this panel discussion. Both hearing the challenges and the successes that you've had as mutual bankers. I think, there have been multiple formats where we've had these types of panels where we discuss the benefits of mutuality, and every time I hear those discussions, I'm enthusiastic about the future of the mutual banking system, knowing that so much positive impact is happening in your local communities based on the work and your contributions. We're going to pause momentarily as we transition to the next panel, so give us 2 minutes while we set up the next set of panelists, and we will return for the next topic, which is a focus on ransomware and cyber events.